I subscribe to the mantras of someone like Charlie Munger or Warren Buffett, and they were also quite critical around diversification. Could you just explain why you think that a normal person should be diversifying or spreading risk?
I think it's really about modesty. You have to kind of admit what your limits are. And the thing to remember also is the stats. The stats for professional investors is, let's look at a 10-year global fund, right? What proportion of professional investors beat just a passive index? It turns out that it's something like 1 in 20. And these are professional investors that have huge resources. They're very dedicated. It's not like they're not trying. It's just that it's a really hard job to do because markets are efficient. If there's any information that gives you an edge, chances are somebody else has already priced that into the stock or the bond or whatever it is. So you just have to be realistic and modest about what you can achieve, I think, and just honest. Just look at the stats.
Yeah, and like you say, it's about recognizing the skill that's involved from a perspective of these people are full-time professionals doing it in a company with unlimited resources. Do you think that you can beat them from, your 2-bed flat in Basingstoke? I think that's the kind of, I think everyone comes into it thinking, I'm capable, I can part-time become the best investor in the world, when actually, no, you probably can't.
I think that's it. You just got to be honest about what your chances are of success. And I think for most people, if you want to have a successful career investing, just ride equity markets up. It's so easy to do and so cheap now to do that, everyone can do that. That's within everyone's reach.
I think it's really interesting that you said it's important to be modest because we were doing viewer listeners questions.
Not something that comes naturally to you.
I don't even know how to spell the word, to be honest. But we were listening to some listeners' questions. They said, someone said, why am I not rich yet? And I feel like a lot of people expect to make millions in the stock market or make millions in investing. How did you figure out that it's best to be modest? How long did it take you along your journey?
Interesting story that, because, when I was part of the investment banking world, it's never even discussed the possibility that, all these fund managers can't beat the index. It was just assumed. And so I always thought of this once I left it as a kind of cult. It's kind of like a cult of alpha. I don't know if you're aware of the two words. Alpha is beating the market. Beta is just tracking the market, which you can do very cheaply. So I think of it as the cult of alpha, because you don't know you're in a cult until you leave it and you become kind of deprogrammed, as it were. So I left and I kind of started PensionCraft, and I came across this report about SPIVA, the S&P Index versus Active report. And that's where I first saw the stats. And I just couldn't believe it because all the people, you fly around the world as a strategist, you write research, you speak to the fund managers, they manage trillions, and they're super bright, super motivated. They're doing their best. And yet they fail something like 95% of the time for some of these categories of fund. And you just think, what kind of other industry in the world could you fail so often and still get paid?
Yeah. Why do you think that people continue to back that industry then?
I don't know. I think a lot of people don't realize what's at stake. I don't think they realize what they're paying their fees for. A lot of people don't realize they're paying fees or how big the fees are. So I think people don't realize the stats. I didn't realize, and I was in the banking industry for so long. So I think that's the problem. And more people are realizing now. I think in the US, for example, lots of people are shifting to passive. That's kind of ahead of where we are in Europe. But in Europe, it's still the case that you kind of trust people. And you just assume if you pay a professional and the more you pay, it's kind of like the Lambo mentality where you think if I pay more for a car, it's going to be better. In finance, it's the other way around.
It's kind of like Emperor's New Clothes.
Exactly.
Yeah. Everyone's sat there going, well, he must be good. Yeah. So I think there's a knowledge gap, isn't there, as well? And I say it all the time, you get very smart people that stumble across your channel that are like barristers, lawyers, and they go, oh no, I finally get it. And it's like, this person is hyper intelligent, a doctor, but for some reason they feel that finance is beyond them. And then they're probably the kind of people that then go, I need to pay a fee. Because if you wanted my services, you would pay a fee. If you wanted a doctor, you get it through the NHS, but they're highly skilled, and they probably equate that to that side. But it's actually like saying, no, actually, if you just took a paracetamol, that'll fix all your ills instead.
Well, with medicine, at least, I think it's much harder. But with investment, it's actually pretty easy. And the simple fact is that equity trundles upwards over time. And once you understand that fact, everything else flows from that. So I think understanding those long-term returns, the base rates, which is just like the average return that you get for different investments above inflation, understanding and knowing that, it should be a post-it. I was thinking of, my daughter's just got a tattoo, and I was just thinking, if I had a tattoo, what would it be? And I think it would be those base rates, 6.5% above inflation for the last 120 years. That's what I'd have on my backside.
And what you're talking there is the on your ass. That'd be funny.
And then bonds would be on the other cheek. 2% less. Yeah.
A little bit of crypto on the nutsack.
Absolutely.
The high risk stuff.
You'd have the vol of crypto on my nutsack.
Yeah. This conversation's gone wild already. There's more where this came from. Click here to watch the full interview with Roman Nikisa from PensionCraft.